Managed futures, one of the few bright spots in what was a dismal 2008. The investment strategy returned 16% last year, according to some estimates. So what exactly are managed futures, and will they continue to be up this year? Paul Wigdor is president of the SuperFund USA, coming to us from Los Angeles. Not the SuperFund of toxic assets, obviously, Paul. We're talking about something else altogether. All right, what exactly is a managed future?
Managed futures funds are an asset class, just like stocks, bonds, or real estate. But the biggest advantage of the asset class is their non-correlation. So a managed futures fund will perform independently to what's going on in the stock market. So as you alluded to, performance was good. From a trading perspective, managed futures funds generally systematically follow trend-following principles and go longer short markets in financial futures and commodity futures.
All right, so last year when we talk about the group or the asset class as a whole going up 16 to 18%, and I'm not just saying outperforming by that amount, actually going up that much.
Sure.
Explain exactly how.
Well, our funds were actually up 30% in our Series A fund and 46% in our Series B fund. It was mainly because in the first half of the year we were long commodity markets. We were long oil, we were long gold, we were long grains and ags. When the commodity bubble burst in July and August, we systematically get stopped out of those positions and we're able to wait for a trend to continue. So then we saw the commodity markets starting to trend downward. We went short those commodity markets. At the same time, really throughout the year, we were short equities and long bonds.
All right, so is the commodities in general, is the trend in commodities still downward?
Well, we're still short many of the commodity markets, although I think over the last 2 or 3 months we've seen some choppiness, so we've been reducing our positions. In a trendless market, I mean, we can be entirely in cash if need be. But we're seeing high correlation between commodities and equities. You know, I have a pessimistic view about equities, so I think that commodities will probably be in a downtrend for a while as well.
Oh, you think the commodities and equities will march in lockstep?
At this point, that's what we're seeing, yes.
Okay, because they're both tied to the notion that we're going into an economic slowdown, so therefore there's not as much demand for commodities. So can you give us some parameters here? For example, oil, now around $42. Where's it going?
We see oil right now trading in a range, as I said. If anything, I see oil moving downward still from here. Just because, as you said, because of our general economic outlook.
Right.
But again, I mean, everything is done systematically. Everything is done based on trend-following principles. So, it doesn't really matter what I think about oil. But if oil starts going up, we're going to go long oil.
All right. Well, Paul Wigdor, thanks very much for joining us. We appreciate it. I think Paul making a case.
Thank you.